Good morning and welcome back to another episode of The Rational Investor. I hope you guys are all doing well. Today is Friday, December 29th, last trading day of the year. So pretty exciting and pretty sad. I like when it's trading days. Weekends, I like when the markets are open. Anyway, today I'm going to talk in the video about 12 stocks that I just put in the safe deposit box and forget about. I'm also going to go into a little bit of how I set up different accounts and what I do to maybe give you guys some ideas. So stick around for the video. Let me know what you think. So, in my mind, investing is really easy and you don't have to overthink it. You pick great companies and you stick with them pretty much forever. The longer you stay with them, the better you tend to do. So, in today's video, I'm going to go over 12 stocks that are essentially the ones that I think of as like set it and forget it. I buy them, I literally ask for the stock certificates and I throw them in a safe deposit box. So, I'm not tempted to sell them or trade them or put options on them or anything else. These are just companies I want to own for the long run. Now, before I get into it and before I get into the details and before I forget, if you guys could do me a favor, if you haven't already, hit the subscribe button, hit the like button, make some comments. I really appreciate all of that. And it helps YouTube's algorithm and people find the channel. So if you're finding value in it, I really appreciate that. It helps others find it as well. I'm also going to put a link in the description on how to open an account at Sofi if you like. By all means, you don't have to. It's just there if you want it. If you deposit $10 or more, you're going to get a free gift of $25 from SoFi. And then I open an account with my son, who's 13 years old, that's attached to it as well. And they send a gift to that account as well. What's cool about it for me is he's 13 years old, gives me an opportunity to help him with talking about investing and saving for the future as well. I know he's really young, but I started this stuff when I'm young. It's what I like to teach. And since I'm dad, it helps when he sees those deposits go in. So it's super cool. Anyway, let me get into the 12 stocks and also how I separate different accounts for different things. So I don't really believe in ETFs unless they're filling in a spot in your portfolio that you don't already have. Like the one that I use, the Vertis Capital, that gets into preferred stock. I do that because I don't research preferred stocks or invest in them separately, and it's a way to diversify and get into that category. But outside of that, I don't really see the value of buying a S&P fund or whatever else outside if it makes it easier for people. I'm comfortable picking 10 or 20 stocks that I think are the best companies there are. I don't get super worried about is today's price the best or should I time it better or anything else. I want to make sure I own the best companies. So, really, I'm going to get into 12 companies that I kind of think are some of the best out there. There's a few that are probably missing from the list that I could substitute in, and I'll make some comments about that as well. But what I do for my own personal investing. Now, before I say that, you guys need to do your own research. I am not a financial planner. This is not financial advice. This is just what I find works for me. And I'm just a guy on YouTube sharing that information. You need to decide what works for you and potentially seek out a financial advisor. Now, if you see the comments in the comment section of some crazy one, by all means, be cautious of it. Those are probably scams. I'm not selling any books. This is all free advice. I'm not reaching out to you guys to try to get some data. I'm just talking about the information I've learned. So, for the most part, I set up three different accounts. I have one that kind of mimics or matches the 12 stocks I'm going to talk to you about that I put in the safe deposit box, but expands to a few others. And I have one account that's all dividend stocks so that I can receive those dividends and I can use them for spending if I need to, or I can reinvest them in the other dividend stocks or the ones they're already in. And then I have a small account as well that I use for trading. The reason I separate these is so that I don't mix them up. I don't want to take an account that I've intended to own those companies for the next 10 years and make the mistake of trading them. I find that's, at least for me, very important. If I want to own something for 10 years, I don't want to put it in a stock that I have online access, that I have the ability to start to think, well, maybe if I sell it here, I can buy it back a little bit cheaper or something like that, where I might miss an opportunity where it just grows over time. And now I've gotten out of a company that I really want to be an investor in, not a trader. So sometimes you might hear me talking about stocks where I'm putting on trades, and it sounds like I take on more risk than I do, or I sell calls or put on different spreads and things like that. But the reality is, the bulk of the portfolio I just take and I put in a safe deposit box, and I try not to think about it. I might flip a price up on the screen out of curiosity, but I know by doing that, I don't want to be trading these companies. And the reason I think that investing is pretty simple is anybody can do that. There's no reason you can't walk around and see what companies you think are great. You don't have to reinvent the wheel. These are not some companies that are hard to find that I expect they're going to outperform because of this, that, or the other thing. What I find is a lot of times when you pick that stuff, it may just sit there and it takes a long time for that to develop. It may not be worth the return, even if that company ends up being that next great thing. And the odds of picking that next great thing are really difficult. So why not pick the now great thing that seems really obvious and is right in front of all of our faces? Like there's no reason to look too hard. Now, if you're in an industry and you know some great products in your specific industry, no reason not to look into those and invest them in that as well. If you're a doctor and you know the greatest tools that are being used, I'm sure there's a company that sells it. Or if you're a lawyer or whatever it is that you do and you're a mechanic, but it doesn't matter. Whatever field you're in that you have insight in, you really might have insight to things that others might not. So I wouldn't shy away from that. So the 12 stocks on my list that I really just put away forever, and this will give you an idea of what I mean about anybody can do it. Um, Meta is number one, or Facebook. I think they're phenomenal. I think they're going to continue to grow. I think they're a great company. I don't worry about valuation. If I overpaid when I bought it, I make sure to buy little enough that I can continue to add on. Number two on my list is Amazon. The minute I started using Amazon, we use it more and more and more. In the beginning, I was using it because I could find things that were less expensive. They're so convenient and their return policy is so great. It's gotten to the point that even if their prices aren't the best, I still tend to use them because of the convenience of they bring it to my door and usually the next day. And if I want to return it, I just go by, they have a thing at Kohl's and they have a thing at Whole Foods where they accept the returns. They also have Amazon Web Services and all these other functions as well that tell me it's just a great company that I want to own for the next 10 years. So we put that in the safe deposit box as well. Another one that fits in is where you're watching me, Google, YouTube. I think the fact that YouTube, I watch my son, the one I talked about earlier, he looks at YouTube the way that I used to look at television. I don't even think he thinks television exists. He probably has no idea who NBC, ABC, Fox, and the like are. He goes to Google for his content, and that's where he watches TV. I presume he's similar to a lot of kids, and I figure a lot of them don't know what TV is, and they use Google or YouTube for their source of television or entertainment. They also have their search engine and a whole bunch of other companies that make it a huge conglomerate, and I picture them growing over time. Give the dramatic move, but the sun keeps screwing it up, and even here it's not so great. Next on the list of 12, I have Starbucks, another company that I think is a great company, and same thing. I kind of look to the younger generation. I watch the kids in the school, and they go to Starbucks. They know what drink they're going to get. They drop $5, $10 for one drink, and they don't even think about it. They just want what they want. And then I know people who go to work every day, and same thing. They buy their Starbucks every day religiously. Starbucks was able to push through some higher pricing. They had great earnings last quarter. I'm a little surprised that the stock's been struggling as long as it has, but really nothing has changed in terms of the company in my perspective. So I hope to own it for the next 10 years. And I hope in 10 years they've doubled or tripled and I get their dividend as well. And I think they're a fantastic company. One on the list you may not be familiar with, which is Abbvie. A lot of you probably are, but maybe some of you aren't. It's a spinoff from Abbott Labs. They're in the drug and pharmaceutical section. They pay a nice dividend. They've had a really good year. They did have one drug that's maturing to where others can compete in it. So there was concern that maybe their earnings will go down. But I think Abbvie is well run. I think they're a good company. And again, it's something I just want to own for the next 5, 10, 20 years. So I put it in the safe deposit box and don't think about it too much. And similar, it also pays a dividend as well. I don't have it in my dividend stock account because it's not one of those that I'm relying on that dividend to help pay bills. But it's nice that they do. Another one I have on the list that's a little bit more of a riskier investment in some ways. It's just I think they're probably the leader in the space. Is I have um, intuitive surgical. ISRG is the ticker symbol, or ISRG. They do robotic machines for surgeries and things like that, and I think they're the leader in that space. And I think so far out, I kind of figure in time there's going to be more and more of that, and the doctors are just going to be there making sure the machines are doing the surgeries properly. And my guess is they do all the repairs, they service them, and everything else. And I just expect them to continue to grow. To be fair, when I look at valuation, it looks a little frothy, but that's my point about on these companies. I try not to pay too much attention to that. They're just companies I want to own for the long run in the hopes that they continue to grow. Next on the one that I throw in the safe deposit box is 3M. I think it's a great company, and I've thought that a long time. They had a lawsuit for damaging the environment, and it caused the stock to fall significantly. It actually got below $100. I've wanted to own them for a long time, but hadn't. And I saw this as a good opportunity to buy some, throw it in the safe, and again, wake up in 5, 10, 15 years, see how it's done. They also have a nice dividend, but another one that really I just wanted to own. It wasn't about the dividend, so we just sock that away and wake up in time. Disney is another on the list. And again, they've been struggling. They have all sorts of things going on, but I still see them as a great brand name. They have great recognition. They have ESPN. They started their online TV station as well, which I think we'll watch how that plays out over time. But I think between the parks and everything else, Disney's just a wonderful company. Eisner's back in there helping to run it, and we'll see how it plays out. If I'm wrong, I'm wrong. But I like the name. I like what they do. My kid loves the parks. And the next on the list, which also got in there partially because of valuation, is Target. I think they're a well-run company. If things are slow or the economy is rough, I find myself shopping there as opposed to Walmart or some of the others. I just like the stores a little bit better. I'm more comfortable going there. I think they have okay products, and I think all of them offer a lot of the same things. But if I'm going to go buy a game or something, I tend to gravitate towards Target. Their stock got really reasonable, picked some up, kind of like 3M, and then thought, I'll wake up in a few years, see how it's doing. And on top of it, same thing, they also pay a dividend as well. Um, Next on the list, second to last, and really no reason second to last, or third to last, sorry, is McDonald's. I think they're the best of the best. I don't talk about them too often because I also have QSR, which is the Burger King version, and an account that I hold. But I've had McDonald's for the past, 30 some odd years, and it just continues to grow and outperform. So I don't really pay attention to it. And that's kind of my point where I learned about the longer you have something, the more amazing it is to see how it compounds. I wish I had the full position I put on originally with McDonald's. I bought 100 shares when I was still in high school, and I graduated in 1990, so I think it was like 1988. And when I've looked at where I really paid for it, now I paid 20 some odd dollars in 1998, and it's split three times. So I'd have 100, 200, 400, 800 shares, and the stock's at $290 from a $2,000 investment. Now, unfortunately, as I was growing up and whatever else, if the stock went up, I sold when it split one time 100 shares to buy a computer. I did something else, and I just don't have it all, or it would be worth a ton. And it's amazing to think about. It'd be $250,000 from a $2,000 investment. That's why I try to stick with these things a long time. Um, Last on my list, or second to last, kinda, is Tesla. I don't have a bunch in there, but I think they're a great company. And it's, again, I, I'm worried about the valuation today, that maybe it's a little bit frothy, but I think they make the best vehicle there is. And I think they'll probably continue to grow over time. So I stick that in the safe deposit box, and we'll see how it plays out. And then last on that list is Foot Locker. I've talked about it a few times. I really bought it because of the new CEO they brought in last year, Mary Dillon. but I want to stick with the trade. So I put in an account where I can't trade it or buy, be tempted to sell it. I really want to give it at least 4 or 5 years to see how she's doing with the company and if it's continuing to grow. My guess is she'll do real well. She had success at Ulta Beauty. And my real theory is people who have success tend to continue to have success. Forgive me, not sex. They continue to have success even if they move on to other companies. They get good at what they do no matter where they're working. And my guess is she's excellent at growing the company. So we put that in the drawer as well. Now, like I said, I do have another account that's specifically for dividends that automatically sends checks to me so I can help pay bills whether work is busy or not. And then I have an account for trading a bit because I used to be a commodities trader on the floor of the exchange, so I like that. But to be fair, what I generally find is the stuff that I just put away and wake up 5 or 10 years later generally does the best of anything else. It's more my personality that can't help but watch and get in and get out and trade and have fun with it. But I think in the long run, most people are better off just setting it and forgetting it and going to sleep and waking up later, going to their job, saving money, and putting more away. And I hope you all see that these are all companies you've heard of. I'm not sitting there digging deep trying to find the next best thing. I'm finding the things that are already the best thing and just sticking with them. I think there's really something to do there with that. When you watch CNBC, if you do, you notice that the same companies day in and day out are always at the tops. The Googles, the Amazons, the Microsofts, so on and so forth. Well, why fight it? Why try to dig for something that's going to be NVIDIA, which is a great company, but why try to dig to find that company when they put it right in front of your face all the time? They tend to outperform and you don't have to overthink it. Anyway, thanks for watching. Have a great Friday. Have a great weekend. I'm sure I'll post some videos this weekend as well. And don't forget to subscribe. Let me know if you made it this far. That'd be super cool to know that somebody made it all the way to the end. Make a comment about, are you really an idiot? I think I'm an idiot. And again, do your own research. This is not financial advice. This is entertainment. This is just the things that I found that work for me, and you guys need to decide what works for you. Talk to you soon. Bye bye.